Hello and welcome to CryptoCurrents. I'm your host, Monica Profit, and I'm here today with CJ Konstantinos, the founder and president of People's Reserve. CJ, thank you so much for joining us.
Well, thank you for having me. It's a pleasure to be here.
I want to learn more about these Bitcoin powered mortgages and bonds that you guys do. People's Reserve is actually, the more I learn about it, and I've just done a little internet stalking of you, but it's near and dear to my heart. I've been, trying to tokenize real estate in one way or another since like way too early. And if you're early, it's a lot like being wrong. But I'm just so happy that you've got the right timing and the right products. So I can't wait to dive into this. It's so cool what you've made.
Well, thank you so much. Well, a lot of the research and development was paid by myself because unfortunately, 6 years ago, I bought a house for 100 Bitcoin. So I can tell you right now that my house is not worth anywhere near $10 million. It's not even worth anywhere near $1 million. So a single family starter home just for my family. At the time, it made sense because it was proportional to my overall savings. And of course, the wife did a good job of motivating me to make that happen. But looking back on it, it revealed a big problem that a lot of Bitcoiners are going to face moving into the future. Because as a responsible saver of Bitcoin, you are positioned on the proper side of an ongoing transfer of wealth. And that transfer of wealth is taking place from this fiat dollar cash printed world into the absolute digital scarce world. And it's the first time we've ever had an ability to do that. So as a responsible saver of Bitcoin going into these coming years, I believe Bitcoin is going to continue to outperform every other asset class in the world. And if you get caught spending your Bitcoin, you're going to look back on it like I do, saying, man, I really should not have spent my Bitcoin on that. I should have saved my Bitcoin. So running into that problem really is what led to the solution, which was we need tools here that help us financialize the asset class. Like just like real estate today, there are a lot of financial tools around real estate. You can take out a mortgage, second mortgage, home equity line of credit. There's a lot of ways to tap in to your home equity. And that's really important because for most Americans, their most important source of wealth is in their home. But we believe in the future, the most important source of wealth is going to be in Bitcoin because a home is to live in, a home is to use. Bitcoin is savings technology. So as we transition that most important source of equity from home equity to Bitcoin equity, we also need the financial tools to tap into the Bitcoin equity to unlock that purchasing power to increase our quality of life and standard of living. And that's what we're so excited to do here at People's Reserve.
That is so cool. Can you just, I mean, as a person who I've bought a home before, I've sold a home, I've had a mortgage, I actually had my NMLS licenses for a while. So, I understand the mortgage world pretty well. But I don't understand really how you set up a good relationship between a person's Bitcoin holdings and their relationship to their mortgage and their home. So walk me through like one product, say a first purchase product that maybe you wish you could have done instead of a 100 Bitcoin purchase?
Yeah. So in my case scenario, I don't really have, at that point in time, I didn't really have a good job, a really good credit score. I was this guy who put all his money into magic internet money. And, banks didn't trust that. So if I go into the bank and say, hey, can I get a 30-year mortgage? I promise to pay you back. Having Bitcoin equity on my balance sheet was not good enough to make that promise make sense to them. So I was in a position where I had to buy the house with cash, and to get the cash, I had to liquidate my Bitcoin. So that created a huge problem for me that I couldn't get financing. But at People's Reserve, we believe that the person who walks into a bank and promises to work the next 30 years of their life to pay back that debt is actually a higher risk lending solution than somebody who's coming to with Bitcoin to the table. We like to call Bitcoin the most pristine form of collateral in the world. It's absolutely digitally scarce. Unlike treasuries or other cash equivalents, you can't just print more of it. It has 24/7, 365 liquidity. At any point in time, you can liquidate the collateral and get cash for it. And you have transaction finality. You don't need to wait 2 or 3 days for that transaction to settle. You need to wait for any of the funds to be seasoned. You get that cash in your hand right away. So from the lender side of things, it always made sense to us that, wait a second, this guy who's making a promise is able to get a mortgage for 3% or 6% now, 7% now, based on promise. But then the guy who's going to borrow $1 million to buy his home and post $1 million of Bitcoin collateral, he doesn't get financing? Please help me make this make sense. So how can someone make a promise and be less risky than somebody who's putting up pristine collateral? It seems to us that the guy who's posting pristine collateral is a much less risky borrower than the person who is simply making the promise. So it's kind of taking these traditional economic insights and then applying the Austrian economics or real world economics to the lending situation, where we make lending make sense again, or we make lending great again. And I know, since you have your MLS, you would know that, you know, when a bank writes a mortgage, it actually is very high risk, which is why they don't hold it on their book. They package it together into a mortgage-backed security, whether it's a residential mortgage-backed security or commercial mortgage-backed security, and then they sell it off to the marketplace as a cash flow product, because it's such a high-risk loan that it needs to be packaged with other loans to help mitigate that risk. But then also, the interest rate is really low, so it's actually a real negative rate of return. So no bank wants to hold a mortgage on their book when they could deploy that capital elsewhere and get a better return. They'd rather just collect their fees, package it together, and sell it off to somebody who's looking for that high-risk cash flow solution. But at People's Reserve, we don't do that. This is a non-qualified mortgage. It's not standardized, so we're not able to package it together and sell it off in search of exit liquidity. This is a loan that we keep on our book, and this is a loan that we earn profits from through interest. And we're proud to hold the loan in our book. We feel safe and secure because there's a cross-collateralization mechanism. Not only is the property securitizing the loan, but also this magic internet money, which is turned into digital gold, which is now turning in through the financialization process into pristine collateral that also securitizes the loan. So we're looking at low risk, high reward loan opportunities, and we believe that we have the chance to redefine the risk-free borrower and risk-free rate in the credit marketplace.
So when you say the most pristine collateral, I mean, I do agree with you. Magic internet money is the most magical of all money that there is. You're reaching the choir on this podcast. But when I think about Bitcoin, I also know that because we don't have all of these sort of false tools of money printing when it comes to Bitcoin, or inflation mitigation in one way or another. We don't have giant institutions buying up bonds to try to stabilize some market in some other way. When we see volatility, it's like it just saves the consumer, 18 months from seeing that like money printing in one moment eventually manifests as inflation in another. It's just like you see it right away if you see a lot of buying and selling, right? So that volatility I always think of as actually a sign of health of any currency. But I also realize it's a very risky piece of this pristine collateral. So you guys have a product that's called like a self-repaying mortgage, and I'm wondering how that model functions, but also how do you mitigate these risks that Bitcoin's volatility is just going to bring with it until at least for the foreseeable future?
Yeah, that's a great question, and that is probably what we're most excited about here at People's Reserve. That is the true innovation of our contract. Any other existing lender in the market space, it's borrowing against your Bitcoin on margin. So now that price volatility creates liquidation risk through margin call risk. So as if Bitcoin could go down 50% in 5 days if there's some type of liquidity event. Now, is it going to go down 50% over 5 years? No. The 5-year compounding annual growth rate of Bitcoin is over 60%. The 10-year CAGR is over 80%. So is it going to go down 50% in 5 or 10 years? No. Could it do it in 5 days? Absolutely. And that presents the biggest risk in traditional Bitcoin lending, where, hey, you post $200,000 of collateral, and a couple days later, that collateral is worth less than $100,000. So depending on the amount of money you borrowed against that collateral, you're going to be getting a margin call. You're going to have to either post more collateral or not sleep at night, knowing that you could wake up in the morning and your Bitcoin's been liquidated. It's been gone because the lender had to liquidate it to close the loan because your LTV ratios weren't off. So no doubt that is the biggest risk in Bitcoin lending. But what we're so excited about and how we've innovated is we wanted to mitigate liquidation risk. I want my customers to be able to sleep nice at night knowing that the Bitcoin's securing their property without worrying about price volatility. So how have we done that? By introducing adjustable interest rates. And so to initiate your mortgage, let's say you're going to buy $1 million property, you would need to at a minimum, put down $1 million of Bitcoin collateral. And that allows you to initialize the purchase and initialize the loan. Now, if the price of Bitcoin goes down, depending on what other lender you work with, at that point, maybe like first of all, you would never get 100% loan to value ratio. If you post $1 million, you're probably only borrowing 500 or 600,000 against that. So you got 50 to 60% of wiggle room before you start getting margin calls and are at risk of liquidation. But with us, it's 1-to-1 because we've removed that price volatility liquidation risk by introducing the adjustable rate. So for us as a lender, the way we see it is if the value of your Bitcoin collateral goes down, then the risk on the loan goes up. So in order to compensate for that risk, the interest rate goes up. And that's what's so important about Bitcoin and the internet economy, free market interest rates. We believe that we have a chance here to establish a free market yield curve where there's not a stated or anchor rate, but instead it's a measure of the supply of money and the demand for loans, as well as the perceived counterparty risk. So even though your Bitcoin goes down in price and you might be under collateralized in traditional terms, you still have the property securing a portion of the loan. And in the long run, we know that Bitcoin is going to appreciate in value, and eventually that LTV will get healthy again. So what happens is, roughly, if the price of Bitcoin comes down 10%, you could see your interest rate increase anywhere between 25 and 50 basis points, just depending on the volatility of the underlying Bitcoin price action. And then vice versa. If Bitcoin goes up in value or it bounces even harder and goes to a new higher high, we'll actually lower your interest rate. And for each 10% threshold you gain in value, we can knock off 25 basis points. So our goal with this is, number one, we want to empower you by getting you financing. Number two, we want to make sure you sleep well at night by removing the price volatility liquidation risk. And then number three, over time, we want you to keep paying a lower and lower rate because the loan has become more and more secure and lower risk for us as the lender. And the lower the risk, the lower the price that you should be paying for that financing. And we create this mutually beneficial relationship between the lender and the borrower that creates a win-win scenario. And we couldn't be more excited to innovate and try out this new method, which I believe is going to be very convenient, not only for the borrower, which is very important, but also for the lender who needs to remain secured.
So yeah, you mentioned the sort of free market yield curve. Can you tell me about any? I mean, I always think that the best innovation is a matter of stealing like an artist, right? So are there any ancillary sort of products or sections of the market that sort of inspired this approach, or was it just simply looking at non-qualified mortgages, the non-QM space, as those of us in the NMLS world know? And just like applying some of the most, like, how do they handle the biggest, most risky unsecured loans? Oh, we'll figure something out. Like, how did you get the inspiration for this?
Yeah, so I have been in the Bitcoin industry for over 12 years, and I've been a market maker for 8 years. So I think my experience in making markets was really like my eye-opening experience as far as the yield curve and interest rates go. For those who aren't familiar, in the traditional markets, the federal funds rate creates the front end of the yield curve, which is an overnight interbank rate. And then you go out the curve, and it's supposed to be inverted. So you go out the curve, you go to like the 2-year, the 5-year, the 10-year, the 20-year, the 30-year. And then you can actually gauge the price of money or the cost of capital using the yield curve. And in the internet economy, which is where Bitcoin is the reserve asset of the internet economy, this is an amazing domain. It's the only economy in the world with no debt. It's the only economy in the world that no one country can control or outcompete because it's an aggregate economy. And most importantly, it's the only economy in the world that doesn't attempt to use communist price controls to dictate the price of money. There is no anchor rate, and there are no stated rates. The rates are determined by free market forces, which depend on the supply of money, the demand for loans, and the perception of counterparty risk. This is a really important thing for people to understand. Like, if you don't want someone to tell you what the price of milk and eggs are, then you definitely should not want them to tell you what the price of money is. The price of money should be determined by market forces, not by stated and anchored rates. And we believe that Bitcoin gives us the opportunity to establish a true free market yield curve. And our products, our goal is when people wake up in the morning, they check the S&P 500, they check the NASDAQ, they check the price of gold, they check the price of Bitcoin, they look at the 10-year U.S. Treasury rate,
Yeah.
and they check the 10-year People's Reserve Bitcoin powered mortgage rate to understand in relation to where the free market internet economy is relative to the traditional economy. And I
Okay,
think,
so when you, yeah, let's just to put a pin in that right there. Like, so when what are you basing your interest rates on then? What is your rate based on in general? I mean, it must be some sort of aggregate of some of these more like synthetic derivative aggregate, rates that you kind of think are overregulated or are not properly stipulated. But like, what are you extrapolating from?
yeah, so the current risk free rate would be considered the US Treasury bill rate because the yield curve is, I believe it's inverted or it's very flat. It's inverted or flat. So right around the 4.5% mark would be considered the risk free rate. But the definition of risk free is up for debate because I think that the
Because
United
it's in
States.
US dollars, it's denominated in a currency that can be printed away into thin air.
Exactly. So
Yeah.
when you lend your money to the government, they hand you a cash equivalent. And the problem with that cash equivalent is that it can be diluted. So over the life of the loan, the cash equivalent that is securing your principal is actually being diluted. And then and it can be diluted at any rate and pace. So if you bought those notes or bonds in 2019, it didn't really look that bad. But after going through 2020 and what happened, you turn around and if you're a small or medium-sized business, you go, whoa, it's year 5. This note just matured. I was supposed to be able to build a factory. Now I can't even build half a factory. What happened? Well, there was massive dilution of the underlying collateral, which was the cash equivalent. And at People's Reserve, we believe that the risk-free rate is the starting point, but we can redefine that risk because in our loan, our principal is actually held in Bitcoin and real estate. So God forbid something went wrong. I mean, we take a lot of steps to make sure that there would be no default. We even allow you to pay. Let's say you have a Bitcoin powered mortgage, you lose your job. Well, you can actually take your monthly payment from your collateral. So until you get back up on your feet, you have a way where you don't have to worry about making that mortgage payment from your cash flow or from your salary.
Wait, and so if I did that, I would just be like, all right, I'm going to take this payment from my collateral. So next month, my interest rate will be a little bit higher because I just basically added to my amount. My LTV just got higher.
Yeah, but each threshold is 10%. So it's not going to take a full. You'd be able to probably pay for almost a full year before you took a hit on your interest rate. So there's a lot of wiggle room in that threshold. And we do that to empower you, to make sure that you can get back up on your feet so that you don't default. We don't want anybody to default. And if we get into a default scenario, what we would like to do is liquidate your Bitcoin, collect the remaining interest and any penalties or fees, and then give you a phone call and say, hey, sorry to let you know, we had to liquidate your Bitcoin, but congratulations, you now own your home outright. But if we don't get in that scenario, if we do get into a default scenario, we are actually defaulting into Bitcoin and real estate, 2 assets that we're very happy to accumulate. Whereas with the risk-free rate, I'm defaulting into a cash equivalent, which is currently soft defaulting because of the deficit spending that is required to run the budget. So default into something that is soft defaulting with the potential to hard default, or default into real world assets that maintain their value through that dilutionary process. To us, that is the risk-free rate. So we start at that risk-free rate. And for us, it's not just the risk-free rate to the government, it's also the prime rate. So you have 4.5% to the government. The prime rate is 7.5%. And that's going to be right around where we start. And then we have a couple other things, like you can post additional collateral. You don't need to post 1-to-1. You can actually become 200% over collateralized. So if you borrow $1 million, you can post $3 million worth of Bitcoin. And you've reduced our risk so much that we're actually letting you buy back points. So you will be borrowing at a prime minus interest rate. You might even be borrowing at a risk-free minus interest rate. I know the way it's set up right now, the lowest possible rate you could get with People's Reserve being the highest over collateralized that you can would be 3.5%. So you're getting back to those levels that the rates were when the federal funds rate was 0 to 0.25%. So and that's a full 100 basis points less than the risk-free rate. But we don't define risk-free as carrying principal in a dilutionary cash equivalent. We define risk-free by the person who has the real estate and the pristine collateral.
Wow, that is incredible. I'm kind of falling in love with this product already. I mean, having just wanted to tokenize real estate for so long. and watching that market be very slow to mature, and also really slow to adopt anything that's Web3. I mean, I think healthcare and real estate are probably two of the most antiquated sort of, yes, bureaucratic systems that are just like, we don't know about that. We still want to go talk to our title officer. We want to talk to our good old assessor's office. We're going to walk down there and see George. It's like, come on, guys. So getting even like title on the blockchain has been like pulling teeth, one municipality at a time. It's insane, but
It's tough. It's very
it's
tough.
tough. You have been fighting the good fight, and you have really come up with like a very flexible, in-house, innovative way to approach the market and beat it.
Oh, thank you so much. We actually, in our beta testing, this is amazing. Talking about putting title on blockchain. In our beta testing, we go through this process of what we call proof of ownership. So you have to prove ownership of the property that you have, especially if you already have it and you want to get a cash out refi or a home equity Bitcoin line of credit. You have to prove your ownership. Well, one of our beta testers sent in their deed, the cover letter to their insurance, and then the last year's tax records in order to meet the standards that we do for proof of ownership. Once we prove your ownership, we actually get that notarized and then sealed on the Bitcoin blockchain. Because what happened to him was that he went back into our system and our system denied him. So through the API calls, we integrate with Real Estate API. We get all of the public information that Zillow and Redfin and all the big guys get. It's actually, that's why we're starting here in the United States. There's a very sophisticated records for real estate, especially relative to international. So because we have those sophisticated records, we can work faster and have a more secure process. But the local government that is under him messed up his deed. The wrong name was on his deed, and he told us, "Thank God I did this, because if someone else found this out, they could have tried to defraud me. They could have went in and said, 'Hey, this isn't correct. The right name is this name,' but it wasn't his name, and then they could sell the property and kick him out, and there'd be this whole legal issue. And it's happened before with lots, but this would have happened with a house instead of just the lot.
So you're actually developing basically a real world application for a new Oracle. Ultimately.
Yeah, we actually have a service. We call it the AI Real Estate Agent. It's a subscription-based service. And not only does it make sure that your records are correct and secured by Bitcoin, but it makes sure that if there are any updates that take place on those government records, our API will trigger that update, alert us to that update, and we can ensure that those updates are true to your proof of ownership. The other cool thing that we allow to do with our AI agent is we let you build a house fax. So I'm sure your listeners have heard of a Carfax, right? You don't go buy a used car without checking the Carfax. You need to understand what's happened with this VIN number. Well, the property address is like the car's VIN number. And
dreams I have had of exactly this, and you've made it. Oh God, this is great.
So being able to create a house fax and show people how you've cared for that property through your lifetime of ownership, the crappy counters that you started out with to the beautiful granite countertops that you have, the amazing backyard that was full of grass that is now an outside tropical oasis. Being able to track all of that and then print out that house fax report to provide to your agent or to your potential buyer is just another way to strengthen the value of your property, letting people know that you've meticulously taken care of this property. It's been in good hands, it has good records, and you can feel comfortable paying a higher price for this property because it's went through loving hands versus a property that has been rejected, and you might have to get 2 or 3 inspections just to feel comfortable to make sure that everything is ready to go. So those are some of the smaller ancillary services built on top of what we built that I think are really going to deliver a lot of value to both homeowners and buyers, making sure that due diligence is done properly.
Yeah, and it makes me think about how, these traditional mortgage-backed securities, they get put into these tranches, right, of like AAA, AA, B, C, whatever their rating is based on how healthy they've been or how risky they are. And that's something for like big, highfalutin secondary market tranches of, dark pools of money that nobody even knows and you can never even have, and da-da-da. Don't even know how that moves the market, but we all just retail people just deal with it, right? And then we don't know like why you can't get this mortgage over here, but you can over there. Well, it's up to those guys, the guys behind the curtain. It's like the Wizard of Oz, But now you're giving us a tool so we can actually, in a way, give our home a AAA or a AA or a B or a C rating for each other to understand. And that
Absolutely.
information, even though our mortgages might have ended up in these tranches, we don't get the benefit of what that knowledge is. It only talks about our ability to pay something back. Like we're just a laborer to pay something back. We're just the demand side to be extracted from. We're the value producer. And now we can actually see the collateral be like determined with value as well. It's like it's just a brilliant ancillary additional, I guess, value that you guys are bringing. I just love that.
Thank you. Yeah, we're very excited about it. It's all about, and the key word that you said there is extract. And that is what we see in the fiat system. A lot of fiat business philosophy comes down to value extraction. It's not really about providing goods and services that deliver value. It's about providing goods and services at the maximum price that you can extract value from people. And at People's Reserve, we're building for a Bitcoin standard. And we believe that in a Bitcoin standard, it's not just the quality of the product that's going to go up, but it's the quality of the customer relationship. So I like to say it, we're not profit maximalists. We're relationship maximalists. I want your kids to do business with my kids because we have a lifelong relationship where you can come to a platform and manage all things life, Bitcoin, and real estate without having to worry about going anywhere else. And we believe in the long term, we can build a multi-trillion-dollar company that develops relationships and puts relationships before profitability. But at the same time, that lack of profitability is justified through the security of the model of the business. So the business model is secure, it's safe, it's redefining risk-free, it's redefining the risk-free rate. And because of that, we're going to treat you like gold, or I guess I should say digital gold, and take care of you the way you deserve to be taken care of. In the long run, even though we might lose 100 basis points versus lending to the government, all of the other things that you do on our platform are going to by far make up for the 100 basis point cut we're taking on a very secure, low risk loan.
So that actually kind of tees up perfectly my next question, which kind of pivots a little bit from the mortgage product to the bond product. That's like a Bitcoin bond as like a tool for a challenging financial time. I totally want to hear about this because I mean it's, hey, just because we're all we're all Bitcoin maximalists here doesn't mean that that we're not going to also endure a tumble, and we all have. The longer you've held, the more bear markets you've been through. So how are you guys? What is this Bitcoin bond, and how does it help the average consumer?
Yeah. So again, R&D paid by me. It's really funny because even way back then, I was so convinced of Bitcoin that I would live paycheck to paycheck. And even now, I mean, very, very comfortable. I still only put enough for a month's worth of expenses in my. I literally overdrafted like not that long ago. And I don't care because I don't trust the dollars. I don't trust the banking system. I want my wealth held in savings technology, and I'll peel from it as I need it. But the fact of the matter is, we all need some form of cash flow. We don't always want to be peeling. We don't always want to be sticking our hand in the piggy bank. We want a piggy bank that also spits out some cash for us so that we don't have to keep picking from it. And that's what the Bitcoin bond is. It's a cash flow product designed for Bitcoiners who know and understand, you know what, to live my life and maintain my quality of life and standard of living for myself and my family, I need to earn a certain amount of dollars. So either I'm going to go to a job and clock in and clock out to earn those dollars, or I'm going to have some type of investment vehicle that produces those dollars to maintain that lifestyle. And that's what the Bitcoin bond is. It's actually a principal protected note. We call it a Bitcoin bond because it's Bitcoin that produces the yield on the bond, but it's a magical structured note because it does a couple of things. The first thing, it affords principal protection. So what do I mean by that?
Yeah.
Let's say that you're a person or even a small or medium-sized business, because getting Bitcoin onto the balance sheet for a small and medium-sized business, there's a lot of blockers for that. But you take $1 million of savings, or you take $1 million of your business revenue and you buy the principal protected note. Well, the way that we have it structured is based on the risk-free rate of return. So right now at 4.5%, the note would be structured in an 80%, 20% split between U.S. Treasuries and Bitcoin, spot Bitcoin.
Okay.
And what happens is $800,000 would go into the U.S. Treasury bills. Well, over the 4 years, or excuse me, it wouldn't be a Treasury bill, it'd be a Treasury note, a 5-year Treasury note at 4.5%. And then over that 5-year period, the $800,000 with interest applied would mature at $1 million value. So your $1 million investment into the principal protected note is guaranteed by the full faith and credit of the US government and the power of the printer. You're going to get paid that money no matter what. We don't know what you're going to be able to buy with it, but they're going to print it and they're going to pay you. So that $1 million principal value is protected for yourself and your savings, or for your business, even sometimes even more important. And then what's left over is the $200,000 of Bitcoin. And that's it's the performance of Bitcoin that directly produces the maturation yield on the note. And what's amazing about this is if Bitcoin goes down 50% over those 5 years, which we talked about not happening, but even if it did, the note pays 2%. If Bitcoin price stays the same, the note pays 4%. But what if Bitcoin does what it was engineered to do? What if it keeps performing as savings technology? Well, at a 60% CAGR over a 5-year period, the note matures with a 40% APY. And if you cut that in half and you apply Michael Saylor's long-term 30% CAGR thesis, you're at a 20% APY. So for those of your listeners who are following closely and understand that CPI is not a true gauge of inflation, and inflation is not 2%.
CPI, say it. What is CAGR and what is CPI, just for our listeners?
Yeah, so CAGR is compounding annual growth rate, and then CPI is consumer price index. And for the consumer price index, the government's official numbers are right around the 2% range. But anybody who pays their bills understands that over the last 5 years, prices have gone up significantly more than just 2% year over year. And if you're not earning a rate above the real rate of inflation, which is CPI is the measurement of inflation, if the cash equivalent or the cash flow vehicle that you're using to generate cash flow is not producing a cash flow above the real inflation rate, you're actually losing money. Because you have the same amount of principal, but you can buy less stuff. You would have been better off spending that money immediately instead of saving it, because you would have got more goods and services in return. Instead, at the end, you're buying less goods and services. But by integrating Bitcoin into our principal protected note, number one, you get the cash flows from the note paid by the government over the life of the note, making sure that you can not have to clock in and clock out and get the cash flow you need to pay your expenses. But you maintain your exposure to Bitcoin. So as Bitcoin performs over that 5-year period, at the end of it, you're getting a rate of return that is higher than the real inflation rate. Therefore, it made sense for you to use this savings vehicle to get cash flow and to increase your overall purchasing power.
So let's just talk about, say, $500,000 in Bitcoin, 5 Bitcoin put into your platform for a bond. What is the person going to expect there? Do you have some back on the napkin kind of numbers for that?
Yeah, sure. And the first thing I would say is that when you buy the bond, you're going to buy it with dollars. So you don't buy it with Bitcoin. My platform doesn't make any money babysitting your Bitcoin. So don't just bring your Bitcoin to my platform unless you want to use it. If you want to use it as collateral, then come on, bring it and let's get you set up and you can be empowered by your responsible saving of Bitcoin. But while you're just responsibly saving Bitcoin, take self-custody, take responsibility, embrace financial freedom and sovereignty, and hold your own money and be your own bank. But when you're ready to use it, or if you're looking to get into a cash flow product like the Bitcoin bond, you would be buying the bond with dollars. And the minimum amount you can buy is $100. There is no maximum amount, just like a treasury. So you buy the amount that you need in order to produce the cash flow to maintain your lifestyle. So if you came with $500,000 and you bought, you would get 4.5% times 80% of that. And then that would be your cash flow distribution that you would be paid quarterly over the life of that note, payments made by the government. Then at the end of it, that $500,000 is what you get paid back with the interest. So when you add up all that interest, you get paid back your principal. It's going to equal $500,000. But what's left over is what did that $100,000 of Bitcoin do? And at 60% CAGR in 5 years, it's kind of hard to believe this math, but 60% CAGR in 5 years means 10x. So that $100,000 of Bitcoin will now be worth $1 million. You would have invested $500,000. It would mature at a $1.5 million level. You'd be sitting pretty. You'd be able to take that Bitcoin directly into self-custody, or we will turn it into cash, and then you can increase your next purchase of Bitcoin bonds to increase your cash flow and increase your quality of life and standard of living.
Rinse, repeat, rinse, repeat, rinse, repeat.
Yeah.
Wow.
Bitcoin as a collateral is an auto deleveraging mechanism. When you post it as collateral, the burden of the fiat debt against the value of your Bitcoin over longer periods of times declines. So it's an automatic deleveraging mechanism as collateral. But in the cash flow product, it's like you're getting a promotion at your job. Oh, I started out in my first Bitcoin bond, I was getting paid, $7,000 every quarter, and that was enough to pay for my family's needs. But now it's 5 years later, and I'm rolling in the maturation value of that bond into the next bond. So for the next 5 years, it's just like I got a 60-70% raise. Now the free cash flow I have is, you might not even do that. You might just take some of it and buy more Bitcoin because you don't need that much more cash flow. But if you are looking to increase your quality of life and standard of living, you can roll it, and it's like you got a promotion.
So it's like you got a promotion. It's sort of, people say infinite money. I'm like, well, I don't know, depending on how you do it, and then people ask me things like, oh, so what were your mistakes in the crypto world? Oh, you must have made some mistakes. And, you've been around for so long. And I'm like, the only mistake I've ever made was selling. Like, that's the only mistake I ever made. That's it. Selling, buying something with it. That's it. Like, if I hadn't done that, I would not be doing anything else, But, on that note, I want to just make this very actionable as we wrap this up. And I'm wondering, for any of our listeners, where do they go and where do they get started to dip their toe into your products? Like the smallest, quick, what would my normal friends that are like, well, I kind of figure out how to use Coinbase, I guess. Just the normals of the normals. What do they do to get started with you guys?
Yeah, so just head on over to peoplesreserve.com and sign up for our newsletter. The newsletter is not just about teaching you about Bitcoin, but more importantly, it's teaching you how to use Bitcoin to empower yourself. So you're going to learn about Bitcoin and how to use it in tandem with our products to make your life better. So that's definitely step number one. Step number two is set a calendar date for yourself, because on July 4th, we call it the We the People Day. If you can see, our slogan is We the People. We want to serve we the people. So on Independence Day this year, on We the People Day, we are going to be doing some really big reveals. So I would say circle that day on your calendar and pay attention there. And by the end of that month, you'll be able to actually utilize our products and services across the United States.
That's fantastic. I cannot wait. So July 4th, We the People Day, Independence Day, whatever you want to call it, Big Fireworks Day, the day that dogs hate, all that day. That'll be the day for you guys. I can't wait. That'll be fantastic. Well, CJ, I am thrilled at what you have built. It's near and dear to my heart. So like I've said probably 3 times already. And I'm so happy with what you brought here. And I'm so happy to be telling people about it. We need these products. And I interview a lot of founders of cool, innovative things. And sometimes they're just so far off in the Web3 world of I drink the Kool-Aid and I love the blockchain, which I get it. we all know. But there's not usually as much that a normal person can do to get involved with those products right away. They're like, protocol, blah, blah, blah. And I'm like, oh, nobody listen to that. You're not going to understand what I do or what anybody does. And you just have this very down-to-earth product that's so useful. So I'm thrilled to have you on the show. Thank you so much for joining us. CJ Konstantinos of People's Reserve, you are a hero, and I hope that you have nothing but the most enormous success.
Oh, well, thank you so much for having me, and hopefully I can come back again after we go live.
Yes, absolutely. I would love to have a part 2, and I wish you all the best. Thank you again for coming on. All right, this is the end of our CryptoCurrents podcast, and I will catch you on the next episode. Thank you so much for listening.